One of our headline sponsors, in fact, is Willis Towers Watson, so it's wholly appropriate that this next session is being chaired by Rowan Douglas, who is the CEO of the Capital Science and Policy practice there. Rowan, I'm going to turn things over to you right away. Thank you.
Thank you very, very much indeed. And it's great to be back at the ICMIF conference, and great to be following that fantastic opening panel, which literally set the keynote and tone for the discussion that we're all going to have together, and most importantly with everyone in the room, about how we take some of those themes and concepts which were discussed this morning and focus how we can think about practically implementing them and driving our businesses, as well as obviously providing protection and security for our clients and our communities in our own countries, and hopefully through some level of international cooperation too. So just to frame the next 90 minutes or so, we're going to kick off with sort of around about 5 minutes of introductory input from our esteemed panelists. And we've thought about this. We had breakfast this morning. We've been having email exchanges for the last month or so. So just to let you give you a flavor, we're going to start with the public sector. We're going to start with Jan from the UN, who's going to really set the scene on this program. We're then going to move from the UN to the World Bank, and Panos, who's had a lot of experience in some of the sorts of transactions and programs that could actually be part of many organizations in this room in terms of protection and partnerships that you've already got. Then we move to Mamiko, who leads insurance at the OECD, and give the perspective of that organization, which is often seen as being an organization of primarily richer countries who collaborate and assess themselves, but of course has a very important mandate globally, so we'll hear a bit about that. So if you like, we're going to start with the public sector, those who help set the rules of the game and the environment in which we operate, and why perhaps insurance is becoming increasingly important as a vehicle of delivering public policy objectives. So from the public sector, we're going to move straight into the mutual sector, and we're going to go to the Philippines, and May Dawat, who's actually taking the place of Aris Alip, who unfortunately had to head back quickly to the Philippines for a funeral, unfortunately, of a close associate. But we're delighted that May's here, the Chief Operating Officer of Card MBA, obviously a very leading and well-known microinsurance organization in the Philippines and beyond. From the microinsurance world of the Philippines, we're going to move to Swiss Re, which works closely with many of those organizations, but of course has a perspective that's rather larger and more global, has a different role within the market. So look at their perspectives on this. And I think to bring us home, a sort of a peer of, if May is a peer of many of those in the microinsurance and developing markets, Rob Wessling, CEO of the Corporators, is obviously a peer of many of you CEOs from developed markets. And to understand how the themes we've been talking about this morning really play out in domestic markets within developed economies, but also how there is much to learn and share across our communities. So that's going to be the kickoff. Then we'll have a relatively brief discussion between the panelists. There's a few things we perhaps want to bring up after probably some themes discussed. But then we're going to rapidly move to the audience and have some interaction. You can send questions in and they'll come onto the screen here. I'll read them out. Or better still, if you feel brave and enthusiastic, grab a microphone and say a few words. But really, this is the beginning of the even more interactive phase. So we'll hopefully have about 45 minutes of discussions. So Jan, you're going to kick us off. And just to set the scene, so Jan leads much of the disaster risk and wider climate-related work at the United Nations Development Programme, which is a key partner of the IDF. In fact, Jan co-chairs with myself and Sam Mainbow the implementation group of the Insurance Development Forum. And Jan actually also co-chairs with David Lomas from BlackRock the investment working group of the IDF. I'm not quite sure that Jan 3 or 4 years ago was particularly involved with the world of insurance, but you certainly are now. And 2 years ago, when we all met, many of us, I know there are some first-timers here, in Minneapolis, in October, I think it was, 2015, really interesting time. We just had the Sustainable Development Goals set in stone, in concrete, and on the web. at the UN in that September. So it was 2 months after that. We were heading into the Paris climate discussions in December. We'd had the Sendai framework. So we were and I remember we had the UNISDR, Margareta Wallström, on the panel, and we were also really at the beginning cusp of the IDF. And 2 years on from that, now it's about sort of implementation and driving some of those objectives. Jan, you've really been part of that story, so great for you to set the scene from the UN perspective and why insurance is becoming more and more important in your world.
Thank you, Rowan. Thank you for the introduction, and thank you to ICMIF and Sean and colleagues for the invitation to come here and talk. And I think, yes, indeed, I would like to just sort of talk about the big picture, if you like, of sustainable development and what that means for the UN and UNDP and also the development community broadly, but actually, much more importantly, the insurance sector. So indeed, let's just take a little bit of a step back and look at the genesis, because it's important to note that there's been a massive change in the way the UN and family looks at issues of development. Now, you'll probably be aware that our focus, in the sense, is at the country level. That's what we do. Our clients, our customers, if we could say that, and our partners are member states, whether they're donors or whether they are partner countries in which we do development work with them. So that actually absolutely is important in our focus. And I say that because it's relevant to pretty much what I'm going to say throughout, which is at the country level, in developing countries where we need to see the change. The kind of change which I do believe that you are doing and could do more of. So let me just start with this big picture. So the SDGs, the Sustainable Development Goals, it is the global roadmap for development. It is basically the thing that we look to pretty much for each and every aspect of what we do, those 17 goals. And there's been a remarkable change, in a sense, for how it positions development. And the first one, I think, is the issue of risk. So if you go back, for example, to the issues, to the MDGs, the Millennium Development Goals, there was no reference to risk at all. It's not at all there. Now, through the Agenda 2030 and the various frameworks that we have, we've seen risk become central to development. That is a massive change. So, for example, we had Robert here talk, who are and UNISDR, the guardians of the Sendai framework for disaster risk reduction. If you go back 10 years earlier to the Hyogo framework, that entire conversation is pretty much about risk happening here and development happening over there, and as if they were separate. Now, because of the new framework, because of the Paris Agreement, even within the financing for development discussion, risk and resilience have become central to the discussion. Let's just talk about the MDGs and the switch to the SDGs, because it's really important to note how important this is, I think, for this community that we have here. First of all, the MDGs were about 8 sectors, a rather narrow slice of life, if you like. Now we have 17 goals, very detailed. It's pretty much every aspect of life and living. So it's a massive ambition to deliver by 2030. The second thing is that it's universal. It's not about Zambia and Tanzania and Vietnam and Chile. It's about the United Kingdom, it's about Netherlands, it's about Canada, it's about every single country. Every country has signed up to it. And that has a particular interest, I think, for those insurers, mutual insurers, who operate and are trying to deliver change within their own countries, for example, within developing markets. I think that the third thing is that it's a massive sea change in terms of the issue of partnership. The MDGs really were structured in terms of financing and partnership. It was about a north to south conversation. Donors and the multilateral system working with partner countries across these 8 goals. The SDGs has exploded that, absolutely. You know, for example, there's going to take $4 trillion a year of financing alone in developing countries each and every year until 2030 to deliver the SDGs. Is that going to come from ODA, development assistance, which is 150 a year, 150 billion? Not at all. So, that immediately calls into play this issue about partnership and bringing other partners to the fore and bringing them to the table. So the private sector, the insurance sector more specifically, are absolutely critical to this discussion. And I would say, I re-emphasize this point, it represents a real massive, almost a seismic shift in terms of what we consider development to be. The development is not something about the development sector. It's about everything and everybody. So I just really would like you to hold that. With one caveat, which is, I think, really important, which is this thing which came through the development of the SDGs, which is leave no one behind. And that, I think, is particular key, perhaps a particular key message, and something the microinsurance community in particular can bring to the table and talk about. So, okay, so that's the basic starting point of your sentence. Now, okay, well, why is this important to the insurance industry? And I hope that I've outlined a few ways. Well, I think the most important thing is that certainly for me, I've realized it working with Rowan and working through the last 3 or 4 years ago or so, that the insurance industry is not just important when it comes to delivering sustainable development, it's absolutely critical, both on the protection and the investment side. It's absolutely critical, and you really have to play your part if we're going to be able to deliver this ambitious agenda. And it's not just about climate and disaster risk, although that's important. It's about every aspect of life and living. It indeed touches upon all of those 17 goals. It's about health, it's about education, it's about employment. It's about every goal. So that's also quite critical. And then just taking a lesson that I learned from Monday, actually, where we listened to some of the stories, particularly from the microinsurance colleagues coming from Philippines, Kenya, India, and Zimbabwe in this particular case. And two things which really, if you like, fit into this, if you like, narrative that I'm trying to give you. One is that insurance is about trust. So in each and every case, the issue about trust was absolutely central. And that trust of a very simple product in some cases led to a marked increase in the well-being of communities and individuals' lives, because a simple product led to their trust in much more complicated products, and in pensions, and in banking, and all of the things that we kind of take for granted, I think. So that's one thing, that it opens up doors. And the second thing is that I do fundamentally believe this, is that insurance allows or enables a space for entrepreneurial thinking. So basically, if you have your assets, your family, everything protected, it allows you to take choices that you would not otherwise chosen. And this is for the macro, when you talk about countries, and also down to the micro when you talk about families and communities. So this consequential value of insurance, I think, is massive, and it's not particularly well communicated, I'd say. Perhaps something we need to do better as a bunch of practitioners. Now, on the UNDP side, we are massively increasing our role in insurance and putting our business case to our new CEO, Achim Steiner, and saying to him why we need to be in this. We're talking about our work in insuring national assets, in the investment side. The new part of our strategic plan, which is talking about SDG platforms, where we will work with governments to build what they're going to do to deliver on the SDGs. We're putting insurance into that. And we're also working with Sean and colleagues on something which we're calling 2020, which I'm sure has been duplicated elsewhere, which is working with UNDP, ICMIF and partners, working in a set of most vulnerable countries with regard to institutions and convening with regard to mutual and microinsurance. And that's something we're working on very soon. But what I want to do is come back to a kind of summary point and also offer a little bit of a challenge, if I may. You know, we have as a marker that G7 target of 400 million people, most vulnerable countries, to be insured by 2020. Now that has to be done with you in the room. It's not going to be done by other people. You know, the mutual and the cooperative sector as part of that 300 million, it's critical. The microinsurance community, well, you have to be able to deliver that 100 million. You know, I would like to hear from the other colleagues, and also maybe the questions and the comments, how we're actually going to be able to do that practically. And then as my final point, and I want to come back to the beginning in a sense, and kind of to reinforce this, which is that, you know, risk and development are not separate issues for the UN. They are absolutely the same issue. And that is why this issue of risk and the SDGs and sustainable development is something we're talking about time and time again. And that is why we're working with the insurance sector. It's not because we like your company particularly. Of course we do. But it is because you are fundamental to this question and fundamental to deliver on the SDGs. So I would say to you, and this is my final comment, is that, you know, the future of development and the future of delivering on the SDGs is as much in your hands as it is in our hands with regard to the multilateral sector, and of course, the partner countries that we are working with in order to deliver the SDGs and to deliver sustainable development. So really looking forward to hearing what you can do to deliver this with us.
Jan, thank you very much indeed for setting the scene and frankly outlining an enormous growth opportunity for our sector. Panos, you've been involved in insurance at the World Bank for, I think, some time, maybe a couple of decades. And some of us were in Washington last week around the annual meetings. And it was quite striking. Insurance was the big buzz at the annual meetings, partly around a response to the Caribbean and other disasters recently. I think there were 4 or 5 major sort of side events. There was a round table with President Kim of the World Bank. I've just read his transcript, and he waxes eloquent about the role of insurance. And he says, as he put his pandemic emergency facility together a year ago, he said, sat down with insurers and we struck the deal. And he talks about it. He said, I hadn't realized. Once they've struck the deal, their aim is to try and make sure that the pandemic doesn't happen so that actually they don't have to pay out. And it was this recognition that there was this alignment of the protection of these populations with the protection of a pot of capital, which was so, I think, exciting. So, Panos, what have you seen in that 20 years? And do you think we're entering an incredible new phase?
Yeah. Thanks, and thanks, Jan, for the great introduction. I cannot do justice saying what the World Bank is doing on disaster risk finance, development finance, meeting the SDGs, but I'm going to focus on a specific sensitive area that also touches a lot of us, is the area around agriculture and food. What we see that is that promoting finance, trying to invest in, to promote food production and also make production of food much more resilient to climate risk is a key challenge. I mean, we need $450 billion a year to finance working capital for production of food. And then that does not count all the investments that are needed to make food production much more resilient. So this is a huge challenge. And when we go around and we find out from both demand and supply, so when we talk to banks, or investors, what are your biggest problems in finance and agriculture? Climatic risks, droughts, floods. And people, it's not because they don't want to pay us, it's because they can't. And this is something that is quite unique in the agriculture and rural areas. And then when you go on the demand side, because we thought that people, the moment that you provide financing, people will get it, again, the risk is a key issue. About more than 50% of people, they don't want financing because they say, what if something happens and I cannot pay? What if something that is beyond my control, like a drought and a flood, and I cannot harvest? I lose my farm. So it's best to stay with low investment, self-investment, and get low yields, but at least I'm not going to lose my farm. So how can we get people to invest in agriculture and promote food security? The other issue, of course, is, and this is one of the development goals, is the universal financial access. So we want more people to have relationship with formal financial institutions, including also insurance companies and banks. So the way that we try to address this issue of that we need to have a better risk management in agriculture. And better risk management for us is 3 pillars. The first one is we need to identify what are the risks and measure them. Okay, what areas, what crops, what are the major risks. Then after you identify and you measure, you know where to invest. And then the investment is both public and private. The old regime was a lot of it on the public sector. Now it's a lot on the private sector and the partnership. And the third one is the insurance, the third pillar. And the 3 pillars need to coexist. I mean, if you don't address the insurance, if you don't address the risk, people will not invest. Because what if there is a residual risk? So I invested in irrigation and I invested in flood control, but what if something happens? And then I cannot repay. So insurance comes as a promoter of this type of investment, as a catalyst. So when Rowan mentioned that I have been working for about more than 20 years in this area, is when we approach insurance companies and we talk to them about farmers, and particularly farmers in emerging markets, in developing countries, they said, how can I distribute insurance to thousands of people that they have half a hectare, 1 hectare? And then how can I do the loss adjustment? going one by one in hundreds of thousands of farms, and how can I pay claims? So all of these things, there were huge problems where, if you have large farms in the US, in Canada, you don't have this problem if you have to deal with 3,000, 4,000 hectares. But if you go to Mozambique, there is no farm that is 3,000 or 4,000 hectares. There are 4,000 farms of 1 hectare. So you need to loss assess 4,000 farms. So that is an intractable problem. So how do you deal with these things? Now, we have moved on, and then one of the things that has happened is that technology has been providing an amazing solutions. Is that you can sell, and I think was mentioned in the morning panel, that you can sell insurance through mobile phones. So you probably know this seed company in Kenya that was selling insurance. So there is a bag of seeds, drought-resistant seeds, by the way. And in order to induce farmers to buy these drought-resistant seeds that also were promoting also higher yields, you just scan your mobile number in a barcode on the bag, and you have your insurance policy. So, very low distribution cost by the insurance company. Then the payment was based on an index. So when rainfall is below a certain level in a certain period of time and in a certain location, then insurance is triggered and pays into the phone. So you don't have to do loss adjustment. It's automatic based on insurance, on the index, and then the payment is done on your phone. So, payment of the claim is also automatic. So that reduced tremendously some of the challenges that we're seeing. Now, of course, it created other challenges. Index is not perfect. So you can have cases where someone suffers losses and the index is not triggered. This is what is called the basis risk. Correlations are never 100%. So that has some of the challenges. It's not to say that it's the silver bullet, but it's something to build upon. So this is more on the micro level, but also the other issue that I would like to say is the investments, the need for investments to reduce risks. How can we make agriculture more resilient? And resilience is not only playing defense, but also resilience is scoring a goal. And resilience also promotes better practices that result in better productivity and better profitability. So it's not resilience because it's just better risk management, but it's better business and can be more profitable business. And I think insurance can be a catalyst to promote these type of solutions. So this is on the micro part, and then I would like briefly to focus on the macro part. So on the other hand, we are seeing also governments adopting solutions to protect the poorer and smaller farmers, people who cannot afford insurance, with insurance-based solutions. And there are some good examples. For example, in Peru, there is a pool of private insurance companies that the government pays a premium, and they offer protection to very small and poor farmers that cannot afford to buy their own insurance. So this is more of a conditional cash transfer, but based on insurance principle. So rather than government struggling to find out who to compensate and where they can get the money after a disaster strikes, they pay a premium, and private insurance companies, they offer the product. Also, the same companies, they offer add-ons policies for more commercial farmers. So it became a catalyst for developing also commercial insurance. And at the same time, the governments also protect their budget. So the governments are not exposed where to find the money when a disaster comes. So there is a lot of solution, and the whole concept is to create an environment where we find PPP solutions, so private-public partnerships, where the public sector crowds in the private sector.
Panos, thank you very, very much indeed. And also for beginning to highlight themes around innovation, both technology as well as sort of economics and policy. And I think some of those innovative themes, Mimiko may be picking up from the OECD. So Mimiko, over to you.
Yes, thank you, Rowan, and thank you, Sean, for inviting me. It's a big conference, and I'm very impressed by this, so thank you very much. I just wanted to, so I've been asked by Rowan to perhaps introduce the OECD first, because I think our work is not very familiar to a lot of people. We have 35 member countries. Our last country that entered was Latvia. We are in the process of completing the accession for Lithuania, Colombia, and Costa Rica. But the important point I want to highlight is that we are not just limited to our activities to member countries. We are actually looking actively to engage non-member countries because, in particular for the work that we do in insurance, we think that there's a lot of value that can be actually much more positive and beneficial to non-member countries because our member countries have usually reached the guidelines and standards that we have already developed, so it's much more useful. And one of the things that we do is we do a stock taking of a number of areas, and from that we develop best practices, and from that we develop policy guidelines, recommendations. One of the latest recommendations that we had approved from our council is a recommendation on disaster risk financing strategies, and this gives a framework in which governments, insurance companies, individuals to sort of figure out what actions they can take in order to develop a strategy. And this is a comprehensive strategy that we developed. We're in the process of developing effective approaches for components of the strategy at the moment. And so we have a lot of work in the disaster risk financing. One of the works that we're doing for APEC at the moment is that we're putting together a report on the contingent liability of disaster losses to see that the government's physical side has a way of approaching how they are going to finance the losses that are incurred by big disasters, whether it's having an insurance scheme or whether they have a fiscal scheme or whether it's a World Bank credit line. So that's one of the things, for example, we're doing. We're in the process of having our council approve a revised guidelines on insurer governance. Governance is a big issue that we like to tackle, and in relation to that, I'd just like to highlight some of the work we're doing in terms of climate-related issues as well. We were asked in terms of the COP21 to develop a report on what we call ESG factors. Probably many of you have heard about what ESG is. It's environmental, social, and governance issues. And they're primarily for institutional investors, so which includes a lot of the insurers, although a lot of them are pension funds as well, and seeing how they incorporate their investment decisions, taking into consideration these ESG factors. And many of the insurance companies already do take into consideration, but it's not all of them, first of all. And the way that they do this is quite diverse. And so we are gonna probably enter the second phase of this project and look at the models that they are using to analyze the types of investment that they should make in order to approach the ESG issues. And this is a governance issue in particular, because it's asking boards to make decisions about investments that already take into consideration the risks that may arise because of climate change. And the other big report that I think Rowan is alluding is, we've done a big report on InsurTech, looking at startups, investment, what types of technologies are being introduced into the insurance sector. One of the outcomes that I want to highlight, and I think it's particularly important for mutuals and cooperatives, is that in particular for less developed countries, mobile technology has the potential to really bring a lot more insurance solutions to a lot more people. This is not limited to microinsurance, and I think there's a couple of examples that bring the mobile technology, and this comes mainly from telecommunication side startups that enter as intermediaries for insurance, and they're able to bring down the transaction costs, which is the issue for microinsurance in terms of making sure that they're actually financially sustainable and bringing this. And I think this is a particularly important way in which insurance can be approached in the less developing countries. The other issue is that insurance technology has the potential to actually respond to some of the compliance issues that countries are facing, in particular for countries that are entering risk-based capital regimes. Complying with the regulations can be very challenging. And there's a lot of startups that are entering this. The problem is that the algorithms that are used for many of these technologies may have some biases, and they may lead to some unintended consequences. So we think that there is a need to monitor what to do, and because regulators are clueless about algorithms, I can tell you with a certainty that they don't understand. And so there is a need for regulators and insurance providers and these tech startups to have a discussion about how to make sure that we have some awareness of what the consequences might be. Now, one of the other examples I want to give is we're doing a big report on cyber risk insurance at the moment. And we've been in a lot of discussions with Lloyd's and a lot of the Lloyd's agents as well about what sort of solutions that they are looking in. And it's a big issue because, as Inga mentioned earlier, cybersecurity is about everyone. You all have your apps about this conference that can potentially be hacked. I'm not saying it has been, but just to mention that anyone who has a smartphone or a PC, and I'm sure that most of you do have some sort of handheld device, are potentially threatened. And I'm sure all your companies have used technology as a normal means of doing your business, and this is also under threat unless you take active actions. Prevention is the best recipe to control your cybersecurity risk, but in the absence of that, we think that cyber risk insurance could provide a very good solution in terms of addressing the financial losses. And insurance solutions can also be accompanied by vendors that provide the security and also can deal with crisis situations as well. So that was one of the parts. And the other part I wanted to mention is that in the OECD, because we do a lot of private pension stuff, we have a couple of reports about behavior economics and how this can influence the options you put forward. You will know last week that the Nobel Prize was won by Richard Thaler, who is the man who sort of advocated for the use of behavior economics in looking at solutions and options. In the pension schemes, and my colleagues have done 2 reports on this already, it's clear that by putting certain options, in particular default options, could be an important way to encourage people to take up more pension savings. And I think this is a discussion that should be taking place also in the insurance sector as well. Inga mentioned also that, for example, in California, although the earthquake insurance is available, only 10% take up. That is appalling, and I think it's the same for a lot of countries who have government reinsured or somehow programs that they provide reinsurance to the earthquakes or other disasters, but the take-up rate is particular. Even in the US, the flood insurance is not taken up very widely. And so I think by looking at how we can introduce options when the insurance policy is being offered can have important implications on how to improve the penetration of disaster policies in particular. And these are some of the issues that we want to tackle with all of us. I should lastly mention that the OECD is primarily an intergovernmental forum, but we are very interested and always very actively engaging other stakeholders as well. In the committee that we hold in June and December, we routinely have a lot of private sector participation. And the objective is because the regulators are not always the leading experts in the risk management, we want to engage the private sector to bring their expertise and inform the work that we're doing so that we can develop the best policy practices for all countries. And so with that, I will close. Thank you very much.
Mimiko, thank you very much indeed, and also for linking our business planning with Nobel laureates.
Yes.
We don't always have that high intellectual caliber within our business planning, so that's great. So we know that insurance demand is shaped significantly by politics and public policy, and it sounds to me like there is an increasingly potentially conducive language beginning to emerge about the role of insurance. May, thank you for coming from Manila. How does this agenda potentially support the growth of the firm, Card MBA, or hopefully perhaps help overcome some obstacles that you may face in the Philippines or in the wider region? Over.
Thanks, Rowan, and thanks, Sean, for continuously inviting Card. So I will be talking about some of the few highlights of the delivery of our microinsurance program in the Philippines, and that will attest to you that this is really working in the emerging markets, and that this really address the objectives of the financial inclusions in support to the universal goal of poverty eradication, because that is our mission in Card MRI. Talking about the business model of Card MBA, we are working closely with the microfinance institutions, banks, and some are cooperatives. So these organized groups, they have members, and these are automatically enrolled to Card MBA. And the organized group sees the value of the microinsurance in their operations because this is integrated in the loans and savings. So in several research studies and impact assessments that have been done, majority of the members shows that they joined the microfinance operation because of the integrated insurance service. And then later on, they have been motivated to become a micro-entrepreneurs. So with that, CARD today has more than 4 million members. And this is being translated into 14.3 million insured individuals. This is about 54% of the total insured Filipinos under the microinsurance sector. And that is our contribution in the insurance industry in general. So I may say that with this model, we are really touching the poor, significant percentage of poor in the country. In terms of service delivery, our objective is to provide innovative and quality after-sales service because the people that we are serving are those low-income sector that what important to them is to receive the rightful benefit and it should be on time. So CARD has innovated our service delivery. We have previously mentioned about the 135-day target. In 1 day, we can pay claims, 3 days, if there's questions, 5 days with finality. But recently, we have enhanced this model, and now we are monitoring our claims in terms of number of hours. So this is the quality of service that we really wanted to give to our clients, and it's good to know that one of our colleagues in India is already adopting this kind of model. In terms of regulatory support, we can say that we are very fortunate in the Philippines that our regulator is very open in advancing the regulation. And several policy pronouncements have been issued and implemented since 2005. 2006, when the landmark microinsurance regulations have been launched. And since then, the microinsurance regulatory framework in place, the basis of formulating the microinsurance product is also been introduced. The performance standards, the guidelines on disputes is there. And now, it's a good news that the Insurance Commission is applying this microinsurance regulation to the crop insurance, health insurance, and also to pre-need insurance. So those are the advancements that being done nowadays by the Insurance Commission. So I can say that whatever CARD MBA has right now is a reflection of the strong support of our regulator. So I am always saying this in most of the conferences because the Insurance Commission is really open to this kind of, because they ask us about the policy initiatives that we want to offer to our members. In terms of commercial insurance, we are working also with them. CARD has a joint venture with a commercial insurance company. And this is because of the changing requirements of our members. CARD MBA, being a mutual benefit association, is only allowed to do life insurance. But because of the climate change, they are now needing protection for their properties. So with this joint venture, CARD has proven our capacity in implementing the disaster insurance. And now we are implementing the crop insurance, and it's good to note that I have a colleague here from the World Bank who is supporting the implementation of this crop insurance. So our target is about 500,000 farmers will be covered by this crop insurance. At the moment, this is a non-parametric insurance, but we're looking to do parametric insurance later on. To sum it all, we are really pushing and supporting to replicate this MBA model to other countries, because this really shows that we are covering, we have the opportunity, the best opportunity to cover the million lives in the Philippines and even in the other countries.
And May, just remind me, how many customers does Card MBA have?
4 million.
4 million?
Yeah.
Doesn't sound that micro to me. Sounds quite impactful to me. About to be 4.5 million by the sound of it with the increase in the agriculture. May, thank you very much indeed. Kurt, if we may move to you at Swiss Re. Kurt's chief economist at the Swiss Re Foundation. In this blend of capital and services, how do you see Swiss Re coming to play with the mutual sector?
Sure. So let me just approach it how Swiss Re looks at this kind of issue. We view it from a protection gap issue. So you have the economic losses and you have the insured losses, and there's a big gap there. So we approach it from trying to figure out how we can increase insurability and close that gap. Of course, sometimes you want to self-insure, so the gap should probably not be appropriately zero. Let me just give you some examples of what we're doing, but also not just in the reinsurance space, but perhaps in the commercial insurance space. So one example is CLIP, the Kenyan Life Insurance Program. It's a small pilot we've started recently. So we take the risk, we do the underwriting and support it, but it's a livestock microinsurance program. And with it, we have a set of satellites that monitor drought in parts of Kenya. And if there's a drought, there's a payout for the members of this. It's just 5,000 at this point. But we've already had 275 payouts. Of course, no value to insurance unless we have a payout. This is what our customers are looking for. So it's good to have this kind of a payment on a regular basis so the farmers understand the value of it. And again, that's a parametric with satellites. A second example I'll go into, which is often in reinsurance, is supporting mutual insurers. You are, as an entity, you can't easily raise finance through equity. Equity is not available to you. Even borrowing is quite stressful. So the reinsurance market is where you can get financing. So we have transactions such as value in force transaction, maybe sometimes called embedded value. This is where for life mutuals, we take on a book of your business for a ceding commission. So we take on the risk and the profitability of that, essentially paying the net present value of that book of business, and you get the capital. So you can grow, you can invest in new markets, or maybe you can invest in new technologies. A third one that we as a company are looking into, maybe more on the commercial insurance side, is things that we call non-damage business interruption. So nothing gets hurt. Even your supplier's not hurt. Your infrastructure's not hurt, but you have business interruption. And the example that I think brings it home on a parametric trigger is a hotel chain. And let's just say this hotel chain has a major income maker in Paris. And so it's a double trigger parametric product. If terrorism, if pandemic, if transportation, perhaps transportation strike or transportation interruption, your occupancy rate goes down. And so on a parametric trigger, of course, it has to be something independent of the hotel company and an independent of us. It's a trade association's occupancy rate for Paris hotels. If that goes below X percent, there's a payout. So these are the kinds of innovations that we look into. Often with, and of course, the hotel's not hurt, the supplier's not hurt, it's just occupancy down. That's why we call it non-damage business interruption. And these are the types of things we look into for increasing insurability as well as closing that protection gap.
Kurt, thank you very much indeed. And Just to let you know, I'm going to come straight to the audience after Rob's intervention. So the questions are beginning to flow into my iPad here, but don't hold back. So in about 5 or 10 minutes, we'll go to the audience. Rob, actually, I'm going to introduce you with a question, if I may. So,
Sure.
So Rob, you're the CEO of the Cooperators in Canada, one of Canada's largest and leading insurers, and I think just operating in Canada. So as part of this sort of panel, and you also sit on the steering group of the IDF, as part of this agenda, are you doing this with your sort of CSR hat on, or are you doing this with your CEO corporate Canadian North American hat on, or a little bit of both?
So, Rowan, I think the answer to that question is yes.
Good answer.
Look, there are real advantages for organizations like the Cooperators and other organizations who seek to get involved in programs like the 555 program, like the IDF, and some of them are sort of practical, on the ground, having impacts right now, and others are more strategic. In terms of the practical on the ground impacts, you've heard already this week very interesting innovations that are occurring in microinsurance, and they're occurring because they're necessitated to. If you're going to sell an insurance policy for $2, then you need to have a very efficient approach to doing that. And so there's a great opportunity for us to learn from the activities that are going on in the microinsurance space and in developing markets. From a more strategic perspective, co-ops and mutuals tend to be geopolitically constrained. So we tend to grow and merge and build until we hit geopolitical boundaries, and then we tend to stop at that point. And I think it's absolutely incumbent on us as a movement to recognize that if we stay within our geopolitical boundaries, if we don't partner with each other, that organizations that are not so constrained, so global insurance organizations, they're going to get the benefit of the learnings in all of these markets around the world, and I think that's actually a very dangerous outcome for us. So there's a broader system-wide strategic reason for this activity as well. So I'll move on with some other thoughts, and then I'll turn it back to you, Rowan. I wanted to talk about innovation a little bit. It's a focus of this session this week, this conference, and really top of mind, I think, for many organizations that are represented here, the Cooperators included in that. And part of what we've been focused on is innovation science. So a set of tools and methodologies that are used to solve very complex problems. And one of the features of these tools and methodologies is that the key question or the problem statement that you start with often isn't the problem that you end up solving. And the reason for that is that the tools and methodologies drive you to really understand the root causes. So if I can use an analogy from medicine, you start off focused on symptoms of an ailment, but if you can actually find the cause, then you can treat it, and the symptoms are necessarily treated as well. Now that might seem like an odd place to start. We're here to talk about IDF and 555 and development, but just bear with me for a moment, and I'll come back to that point. So specifically with respect to the IDF and the 555 program, these activities are really hitting at a number of significant problems in societies across the world. Problems like income inequality, gender inequality, chronic poverty, a lack of food security, and really a myriad of risks that are associated with climate change. And if I think about the 555 program specifically, we have some wonderful examples of how filling the protection gap is actually creating a solution to many of these problems. So I'll share two very quick examples to add to the examples that May provided earlier. So Islamic Takaful in Kenya is helping pastoral farmers deal with drought risk. And as a result of their program, they are improving and stabilizing incomes for their members, And in addition to that, their members are becoming more resilient to climate change. So there's a lot of loss prevention activity that goes on with that program as well. If I think about Uplift in India, they are providing health insurance, but also healthcare services and advice to the very poorest of the poor in the country, having massive impact. A main focus of what they're doing is on providing healthcare coverage for women and their families, so they're impacting gender inequality. Often the illnesses and injuries that they help prevent or that they treat really stave off catastrophic economic impacts for families. And so, they're focused on the protection gap, but they're really solving many, many problems for those communities as a result. And a very small example, case in point, speaking to the folks from Uplift this week, there's horrible flooding that's happening in parts of India right now, as many of you will know. And a very simple problem, but an egregious problem is there's not fresh water for the people that are living in the slums. And so what Uplift did is they delivered water tabs to their members in these areas so they could have clean drinking water. And it's that loss prevention that makes such a critical impact. So collectively, through this program, we've developed what I believe is a sustainable, robust, compelling set of solutions to the protection gap, but also to a significant number of challenges. So now back to innovation for the moment. We're focused on the protection gap, but we're solving inequality challenges. We're focused on the protection gap, but we're solving food security challenges. We are solving climate change challenges. And my point here is that we've landed at a root cause that has many, many branches that are impacting the communities that we're trying to serve. And so, here we sit. We've heard today already from the United Nations, from the World Bank, from leaders in the insurance industry, that all of those organizations, and add sovereigns to that as well, are seeing the importance of insurance in implementing and realizing the SDGs and in improving the development that we're trying to create across the planet. I think we have an unprecedented opportunity as the cooperative and mutual system because we have this set of solutions that are so compelling. If we think about it for a moment, we are developing a self-sustaining model for insurance cooperatives and mutuals in all of the countries where we're operating. So certainly we're providing capital and technical assistance, but it's only there for a period of time, and then these co-ops and mutuals can grow on their own. These organizations are hardwired to be focused on members' needs because they're governed by their members in their local communities. They're driving sound risk-based solutions on the part of families, on the part of sub-sovereigns, on the part of sovereigns, which, by the way, as we heard this morning, is a significant challenge in the developed world. In countries like Canada, we don't send the right economic signals vis-a-vis disasters, and so we put our homes and businesses and critical infrastructure in harm's way and in ways that seems ludicrous when you look at it in aggregate. So there's a lot for us to learn from this work that's happening in the developing world as well. And then finally, because of the cooperative and mutual model, we're actually building community because the surplus that gets created out of the insurance activities that are occurring stays in the community where it's created for the benefit of those communities. So my esteemed colleague, Jan, issued a challenge at the beginning of this session, and I think we should take that challenge up. Collectively, with the intellect, with the capital, with the experience in this room, we can make a wonderful impact and have a wonderful opportunity to do so. And I would strongly encourage everyone in the room to consider supporting the 555 program, to consider supporting the IDF initiatives. This may be a once-in-a-generation opportunity for the cooperative and mutual movement.
Rob, thank you very much. And talking about impact, I think I'm right in that Cooperators is allocating about 10% of its investment portfolio to impact investing. Is that right?
So we have a goal by 2018. I think you've moved the goal up a little over a year on us now, but we have a goal by 2018 to have 6 to 10% of our invested assets in impact investments. And so, they need to be verifiable, intentional, and have a measurable impact on some social or environmental metric. For us, this is the right thing to do. It fits with our values, but it's also the right thing to do from a business perspective, because we believe strongly that organizations that are focused on sustainability are also going to be better investments in the long run.
Rob, thank you very much. Well, thank you to Sean and to ICMIF for putting together such a great panel, but frankly, thank you more importantly for putting together 400 people in the audience from around the world, and whatever collective wisdom and impact of the 6 or 7 of us on the panel, it is a mere fraction of what the impact influence will be from the room. So we're going to go straight to sort of questions and dialogue. The questions are flowing in, so I'm going to go to a couple here on my iPad, but please start waving hands for microphones and to begin the questions. Not all of these have been signed, so if anybody wants to claim credit for these great questions, please feel free to do so. But the first one is, and it's really about sort of providing signals around risk. So before we get action on disaster prevention, recognition that risks are real is key. It feels like there are a worrying amount of misinformation and inertia at a national level, even in educated Western developed countries, in particular with natural disasters. We have an amazing amount of global groups at this conference, both public and mutual. What is being done and what are we able to do to make the most of these groups to address this fundamental misinformation or misunderstanding, then not having impact perhaps on people's behaviors? Anyone want to pick that up, and then I'm going to go to a few more.
Shall I?
Mimika.
Yeah, so one of the things that we recommend in the recommendation on disaster risk financing strategies is that to do a periodic risk assessment, and this is mostly applicable to governments. However, as we know from the hurricane experience in the US, even in the US, the hazard maps are not updated in a manner that is conducive to actually taking action in a timely way or making sure that the insurance provision is adequate. So that's something we know already. Now, we know that in many cases, and this includes Swiss Re, a lot of the reinsurance companies already have the data that is necessary. In particular in Western countries, this is something that is already available. But there is no dialogue between the public sector that could benefit from getting some of the private sector expertise and data, and the private sector that has this, I think in terms of the government, they have this view that the private sector approaching them is a little bit of a scary thing because they're trying to sell them something. And so this dialogue in many cases, I think, breaks down. And I think there is an opportunity, and I think IDF is trying to address this gap in particular in ensuring that this conversation takes place. So I think there needs to be a way in order to recommend to specific governments what they need to do in terms of making sure their risk assessment is appropriate and up to date as well.
Mika, I just want to bring Robin quickly because I know you've done a lot of work on taking on flood risk modeling in Canada since the recent, well, relatively recent now, 4 or 5 years ago. Is that having an impact on both the general awareness of risk for those who may not have been affected yet, but they could be? Is it changing perceptions and business?
It absolutely is. In answer to the broad question, and I'll get to that specific, Rowan, as you requested. In answer to the broad question, we have a choice. We can either pre-fund for disasters or we can post-fund for disasters, but we will pay nonetheless. And actually, if we post-fund, we'll very likely pay more. And that's a message that I think needs to hit decision makers at all levels of society. our experience in launching flood coverage in Canada, and we offer it ubiquitously. So we haven't hit every province yet, but we will in 2018. But when I say we offer it ubiquitously, if your home is sitting on the floodplain, or if it's sitting on top of the mountain, you can buy flood insurance from the cooperators. And we did that for a very specific reason. And the reason was that those that were at severe risk did not know it. And as a result, we've had lots of really challenging conversations with our clients. We've had lots of really challenging conversations with government officials who also didn't know that parts of their communities were at really significant risk. But the little bit of magic that happens when you actually insure or offer insurance against these risks is that they become pre-funded, and the knowledge that comes from pre-funding actually allows individuals, businesses, communities to make smart decisions about where they place their homes, businesses, and critical infrastructure in the future, but also how they protect what they have. And it's not an additional cost. The cost is already there.
I think there are just some very quick interventions, if I can, on this topic, and then we'll move to some more questions. I think Panos and Kurt.
I think I'm speaking more about experience in Latin America. We've seen an increasing number of countries in Latin America that they collect information about disasters and about zones and what kind of natural disasters impact the zone, the crops. And this provides a very good information about what is the right crops and the right risk to do and also to finance. And there are some very interesting systems like in Uruguay where it's a public-private partnership around information and dissemination of that.
Thank you, Panos. Kurt.
Yeah, so just to pick up on what Rob was saying, in the best initial signal that insurance provides is the risk-based pricing. So if you're in a floodplain and you become aware of what the cost is to insure, should be a shock to many individuals. The second part, which is, I think, even more difficult, because sometimes the shock is, okay, I'm not going to buy the insurance, unfortunately. But the second is engaging with that homeowner, but also the local government on the mitigation strategy that could alleviate that risk and make it much smaller. And this is really non-trivial. We have, of course, a global partnership initiative that works with governments. We try to engage governments that might take on that risk through a catastrophe bond or that kind of thing. But in that process of understanding the risk, which is a big part of what we look over ourselves doing, is getting awareness of the risk and potentially mitigating it so that it becomes more insurable, more affordable. But this is not a trivial exercise.
Kurt, thank you very much. Any questions in the room? Who wants to break the ice? I've got a few more on the screen. Okay, I can't see any hands yet, but please don't be shy. Right, next question about sort of growing penetration is, does the panel think that insuring emerging risks, such as personal or commercial line cyber, perhaps picking up on some of the themes Mimiko was talking about, is a way to reach customers not currently utilizing risk transfer as a means of protection? Anyone want to think about those?
So cyber is a difficult risk.
Yeah, it's not easy, is it? No.
It's not sort of like you can sort of throw out some policy. So the big issue with cyber is, of course, accumulation risk. Say there's a virus that hits maybe even your company, your insurance company, as well as many of your commercial clients or households, whichever it is. And it's that kind of part of cyber that makes it very difficult. So I think all private companies and I'm sure cooperatives are looking into how we can address this. But it's not a trivial risk to insure. You just can't put out a policy without understanding the accumulation part of the risk. So we had a paper this year on it. It may need more than just the insurance community, but we'll be monitoring and trying to produce products for the private sector and the households.
Namika.
Yeah, so one of the things that I think is very difficult with cyber is the quantification, because the data available, we have no idea whether people are overestimating or underestimating. I think that's a fundamental problem because in many cases, for example, a bank will not necessarily want to tell the world that they have been attacked because it can have it could damage their reputation. And so there is a very difficult discussion that's going on about how to make sure that the loss data can somehow be put into a repository. And I think this is one of the conversations that is happening at the moment in terms of the CRO forum. There's been some efforts by Geneva Association as well to see how this can happen. But it is a very difficult thing because it's very sensitive data for many, many people. So there needs to be a neutral party that can collect this data to make it somehow available in an aggregate form for insurers and modelers to be able to quantify it. The other problem is that it's an evolving risk. And every time you open the newspaper, there's a new type of attack that people had not sort of assumed the magnitude of it. We know the DIN attack earlier this year, how that had a real repercussion. And business interruption will be one of the biggest areas. The other problem with cyber is that a lot of the property policies you have may already have a silent coverage. And in many cases, the insurers are not quite aware of that. The Prudential Regulation Authority in the UK has asked insurers to try and figure out what silent coverage they already have. But this is also a monumentally difficult task to do. There are so many hurdles that are involved in cybersecurity. It's difficult to say what approach could lead to better provision. But I think there is, and when you talk to insurers, there's two different, very divergent approaches. There are some that are very eager to get into it, provide policy at whatever cost, probably underpricing it because they think they want to get a chunk of the market. And then there's other reinsurers that are like, no, we're not going to touch that. That is we have no idea what's going to happen. So again, there's a lot of very divergent views in terms of reinsurers and insurers as well as how they're approaching it. So it's very difficult. We're trying to put together some terminology and some classification of loss incidents so that there can be eventually some way of classifying losses, but it is an ongoing conversation.
Miko, thanks for taking that on because the eloquent response you've given has given the time for everyone else to put up their hands, which is to think of answers. So quite quickly, I'm going to go to Jan, and then Kurt, and then Rob. But there's a stream of questions and only 30
I'll be
minutes
very quick
to go.
on this. So first of all, just on that first question, I'm going to cheat. Go back. There are no disasters which are natural. Let's us as a community make sure we do not make that mistake. They're a function of, if you like, hazard, vulnerability, and exposure, but they're certainly not natural. So that's one thing. On this issue about, just to show that how the development community also has to learn, I don't know of much conversation that's happening on this issue about cyber risk and development. I assume there might be bits of the UN like UNITAR, specialized agencies which are looking at this. There is one initiative which we're doing together with the World Bank and quite a few other entities, which is looking at how multiple risks coincide within countries. It's called the Global Risk Informed Development Initiative, which is about how do multiple risks in developing contexts actually collide and inform each other. So there might be some way that actually cyber risk enters that, especially with, I guess, middle-income countries, where indeed they are very well connected into the world of the internet, etc.
Thank you, Jan. Kurt.
Just a big role that insurance, and this can be for mutuals, of course, also with respect to cyber risk, is engaging with your clients about how to mitigate cyber risk. So a big part of most insurance parts that cover cyber is working with the client for them to understand how, are they top of the line, are they best practice with respect to protecting themselves. And of course, as an insurance entity, you know all the different practices, so you can share this information. And this is a big part of mitigating it and something that we can do as an industry to help our clients.
Thank you, Kurt. Now, I'm going to buy a bottle of champagne for the first person to ask a question in real life. So one more from the screen and then a bottle of champagne to the brave soul who breaks the ice. Okay. But someone's reading my mind because this question's come in. How can each sector be confident and trusting in sharing expertise and data when we're all motivated by different objectives? And one of the interesting things in the IDF is it has brought together groups of companies, the 3 global insurance associations, ICMIF, IIS, and Geneva Association, with various agencies. And it's enabling that dialogue at a global level. But I'm very conscious that many of us here in this room operate within national markets. And I just want to ask, within that national context and dealing with governments and having this dialogue, is there even more opportunity for the industry to come together collectively, either as a group of mutuals or even beyond that, to work with governments to actually crack some of these either natural disaster challenges or social protection issues? And somehow I sense that governments find it more helpful and easier to be able to liaise with appropriate groups of organizations, so long as, obviously, when things get into the more operational phase, there can be free and open competition. And that's one of the key things we've been having to work through in some of the interventions of the IDF. So how can we stimulate that environment at a national and even at a city level or state level where often insurance is managed and regulated? Rob, please.
Rowan, I think cooperatives and mutuals are extremely well positioned to influence on policy, and it's for a very simple reason. The starting point in our interaction with elected officials and regulators should be, here's our purpose. So, in the cooperator's case, we exist to provide financial security for Canadians and Canadian communities, period, full stop. And as a result of that, the lens that we look through, the objectives that we have for the communities that we serve, for the members and the clients that we serve, are often very much aligned with public policy objectives. Now, that doesn't mean that our peers, that our PLCs do not have those similar objectives, but we're positioned very well because we can say this is directly in our DNA, it's directly in our purpose, this is our starting point. And we've certainly found in the Canadian context that opens doors that would be difficult to open otherwise.
Perhaps someone from the public sector want to respond to what's the best way for us as mutuals or even beyond to engage with your organizations, particularly at a national or even a local level? Are we better coming appropriately collectively rather than individually as companies?
Maybe I can start off.
Momika.
I'll just give you one funny example that I've seen. We regularly organize forums in Asia, and when we were there was a Cambodian government delegate, and she was being chased around by a reinsurance company. And she was telling me that she's a little bit afraid because when these insurance companies approach her, I think they feel as if they're going to be boxed in to do something, and I think their marketing approach can be a little bit intimidating. And I guess it's also a personal sort of interaction as well. And so, we had this conversation, and, I had to explain to them what the intent of that person was. And I think after that, they did have a conversation, and it went very smoothly. But just to say that, it is very imperative. And I think the cooperatives and mutuals do have an advantage in that their profit motivation is not center, it's more the membership that is much more important. And I think that is quite an important thing to discuss, and as Rob mentioned, when you interact with government officials, because the government officials want to have a conversation, but they are a little bit afraid, as I mentioned earlier, that they are going to be approached, and because they lack the expertise, they're going to end up making a decision that may not be optimal. And especially in a market that doesn't have a lot of competition, and especially there's not a lot of foreign competition, this can lead to, concerns by the government side.
Panos, thank you.
Rowan, I was thinking that in some of the more challenging risks where pools of insurance companies could address that. For example, in Turkey, we have the earthquake risk is a pool of insurance companies. In Spain, agricultural insurance is a pool where also the government provides a certain level of reinsurance for some kind of a catastrophic level to reduce the overall cost. So I wonder if that for certain type of risk, pooling among local insurance companies could be a solution.
Okay, thank you, Panos. Any questions out there? Sir, name and affiliation, please. I thought I was going to have to say a glass of champagne and dinner with your favorite Willis Towers Watson broker, I have to say, but I didn't have to go there. Is that Dom Perignon or Bollinger?
I'm not that fussy. And Pete Frizzell from FMG in New Zealand. I'm just interested, really, there's been quite a lot of talk about the impact of climate change and the urgency of what we're needing to do and how the mutual and cooperatives can work to influence regulators. I'm probably interested to see how you see that navigates, and it was touched on one of the speakers this morning, around how the political environment varies, and obviously the US is a good example where the political approach to climate change is changed quite dramatically between governments. How do you see us being able to play an effective role there so that you don't get small gains and then it just drops off, or you've actually got to start from square one when there's quite a change in political perspective around climate change and what happens?
Thank you. Who wants to pick that one? Carlos.
Yeah, I mean, I'm trying personally to steer away from this political debate. I think that we're seeing events that they become more frequent and more catastrophic, and this is undeniable evidence. We also know that a lot of solutions that improve resilience, they also improve productivity. So it's like a win-win situation. So, if we try to focus on the business case, that it makes a lot of good business to invest in resilience, because we smooth the income of our operation and also we become more productive. I think that this is the case. Now, whether we believe in climate change or not, that's a different story.
Jan.
Yeah, Rowan, if I may, I'd say two things which I think can point positively to the future. On the one hand, the response, both within the United States and I think globally to decisions that came out of DC, have been remarkably positive. Remarkably positive. So that whole subnational thing, the leadership of states, of cities, of communities, and the response of other countries has basically said, well, we need to deliver on this because we believe it is absolutely central. Now that's a great thing. We need to build on that momentum. I think the second thing is that, there are tools and things which actually countries have to do with regard to climate change, which we should also piggyback onto. So, for example, the nationally determined contributions. Each and every country has made a set of contributions to deliver on Paris, which includes, indeed, a lot of it on mitigation, on energy issues. But for example, 65% of developing country NDCs focus on adaptation issues and resilience issues. Now, where can the insurance industry come into there and say, well, actually, okay, you've made adaptation and resilience a key point. How about we can help you deliver on that, which will then relate not just to Paris, but also to the SDGs.
Jan, thank you. Kumar, I'm afraid the champagne's gone, but maybe a bottle of Prosecco is still available. So,
I don't
Kumar,
drink. I don't drink, it's okay.
Okay.
It's something that I was wanting to ask since yesterday when we started, it's a brave new world, it's new risk, all that words flying around. India has a population of 1.26 billion. China has a population of 1.4 billion, if I'm not wrong. And our insurance penetration in both these countries are less than 3%. And this penetration is mostly in life. I just wanted to ask, is there a commitment within the IDF, within the big guys sitting out there, to talk directly to the political establishment rather than the regulators, because they are subordinate to the political establishment, and show them that it is necessary for these political establishments to think about insurance, and especially in these two countries, because not just because of the numbers, but also because the smaller countries around them follow what they do. So whatever Indian regulator designs, it's followed in Sri Lanka, Bangladesh, these places where these are also climate change affected countries. So is there a very direct thought to talk to the political establishments, because we can go around talking with the regulators and we can do that for the next 10 years. But I think if we talk directly to the political establishment, there can be faster results. It's scary the way things are happening on ground. Climate change is something that, as Rob was mentioning, we are facing it right now on the ground. So that's the question.
Sure. I'm going to take Chair's privilege and answer that one directly, and because the simple answer is yes. I think the reason that ICMIF and others have engaged with the IDF is our aim is to go to the UN General Assembly, and the UN is an organization of governments and heads of state and heads of government. Ditto at the World Bank annual meetings. And I can absolutely say that those meetings with ministers are happening. They will happen in Bonn in November. So absolutely, ministers from developed countries about their own risk as well as where they can support in terms of donor agencies and support, but increasingly those in emerging developing markets. There's even a delegation going to Peru on Monday. So absolutely, ultimately, insurance is really about politics in a sense, and it's the politicians that are absolutely key in creating a vehicle for that engagement, supported by key institutions, but key as well. I'm conscious that we are now drawing pretty much to time. Is it a hard break now, or a minute or two? I just want to very quickly say thank you to there's a number of questions which I didn't have a chance to answer here or read out. We will do our best to liaise. I'll share with the panel and come back to you. Particularly grateful to the person who came with a question in Japanese and a kind translation as well. But now I head back to our Master of Ceremonies, Fei Lejeune. Thank you, everybody.
Thank you very much, Rowan. That is a very good point that Rowan has just made about the questions. You can send your questions via the app in any language that you like. We'll be using the marvels of technology to translate it and bring it in whichever language to the chair of each session. Also on the app, some photographs already from this morning's session, from last night, and you can add your own as well. We will be monitoring them, however, so, a word of caution. But thank you very much for your attention. Please join me in thanking our lovely panel.